Marvel is the next one. Weekly is within a range, but daily has a very nice level around here, which if it gets broken, we could get a bit of momentum. So that's relatively nice. We have somewhat of a window up until here that we could play. The 60 minutes also looking nice. Level's a little bit scattered, but relatively all together, so it's a nice area. What I like about it is that, or what I don't like about it, let's start with what I don't like about it, is that we haven't really lined up to the level. We have an approximation, or a price approximate. Okay, let's just start over. So, price didn't really line up with the level. It's just kinda there in a bigger range, which is not my favorite thing. Usually with these levels I like for it to be confirmed very tightly in pre-market, and then we get some sort of like fake break reclaim. We didn't do that, so playing it with more confirmation, we broke out of the level. Not the biggest fan of the fake break, but really like this reverse head and shoulders. So could have played that, stop around here after the break of this mini range, which was the second shoulder, and then a break of that range is the entry. I'm holding, since it's a very large scale breakout in my opinion, and even though we faked out before, I think that this window could still be played. Of course, I'm not playing for that intraday because that's a lot on the ATR, or a lot of pressure for one day. Pressure in air quotes, of course. ATR is approximately $3. Started to move down at 71, 74 would be the top of that, which is quite nice. 80% of the ATR is $3. Okay, still gotta get myself into this. BDD right down at an initiation support level, which was also resistance in the past. So that's very nice. Daily is just kind of like dumped on some news, very likely, and now it's just chopping around. Not really my favorite here. We have somewhat of a range, and on a range, another way to play it other than waiting for it from come all the way to the top to the bottom with a nice extension and play it back into the middle is to have another mini chop zone in the middle, get a burst out, and then an immediate reaction that burst out didn't work, which was relatively nice. On the 1 minute we got a nice separation from the 9 EMA, very nice confirmation candles at the bottom. Could have easily taken a trade here, played it back towards PDC, which was the value area on the 60-minute chart, very likely. On these trades I don't really care about SPY unless it spikes down with my stock as well, which around 935, 940 it was just trending down relatively slowly. 1, 2, 3, 4, 5. So it also spiked down at 935. Not the prettiest, but given how it had a news catalyst not so long ago, I'm not really trying to correlate it that much with SPY, or I don't really think it has much correlation to SPY. Pfizer putting in higher lows, although cannot really start trending, which is not really a good thing to see on the weekly. Daily just came out of a range, and this would be playing day 3 after the break, so that's a bit weird. The top of that range was relatively clear, and I played the retest of that. It didn't really get super extended from the 9, it was basically parallel, and we only got like one push candle with a confirmation candle that was well within, or the majority of the confirmation candle was well within the previous candle, which is not my favorite thing. I usually like these to be outside or something, so that I have more room to the 9 and we don't spend more time within a same price range, which is usually better for the snapback trades. 60-minute only had 2 consecutive candles, so did the 5, and I'm guessing the 15 too. Yep. So this is just not really a trade that's worth taking in my opinion. UPS ranging, daily has got a very clear range as well. we came all the way from the top to the bottom, so that is very pretty. We have approximately 2, 3, whatever you want to call this ghost candle, consecutive candle extensions. 5 minutes also very extended from the 9-2, although somewhat parallel, not really getting a nice acceleration. 15-minute has 3 consecutive candles as well. 1 minute didn't really put on much of a turn. That was, I'm not sure what that entry was. I'm guessing it was a sim and this was maybe live. I don't think so, because this is not usually the confirmation I take. I would have loved to see much more lower wicks and green candles here, where I would have taken after the turn, after the new mini. 1 minute range break, an entry, stop below here, and just taken along. But we didn't really get that. So yeah, this would not have been a trade, although the LTFs were quite sound. VRT. So weekly putting in a lower high here, not really a big fan of that. Daily's doing a double bottom though, with a relatively nice level right at the confirmation candle. So that is clean. 60-minute doesn't have that. It is a bit more choppy with some worrying resistance and support levels ahead. On our level though, we have set up a very slow descending triangle which got broken, and I have found that on approximate levels, whenever we set up a pennant, a descending triangle, whatever like this, that is usually about at least an hour or more long. The break of that tends to be quite nice, and that's the way to take these trades, not based off of like quick fake breaks of the level and stuff. So I think this maybe could have been taken. I really didn't like the overhead resistance and that it was a descending triangle. Yeah, probably wouldn't take it, but I'm really on the fence about it. Disney, okay, so we do have some sort of an extension. We are setting up for a double bottom, and the reason I say that is because we have opened here after a bounce off from the 9. We have fake broke this candle and have now reclaimed and turned green, so that is very, very nice. We have a relatively nice level that we can play, although the 60-minute price action, we can see that the level's been really, really smeared, so not really paying that much attention to it. In this case, I think that the previous confirmation of the descending triangle would have been much, much nicer with this larger time frame setup than on the previous one. We've got quite a lot of levels ahead. What I played for was the fake break of the clean level on the daily, which I probably shouldn't have due to how imperfect it was, or it wasn't well respected on the 60-minute. Fastly, not really liking it on anything. Weekly is more of a short below this level, coming off of the 9. Daily, I'm guessing I played it for a double bottom. I'm not really sure if, no, this is not a new low, so yeah, somewhat of a double bottom. Maybe could have played this day, but playing it here would be a stretch in my opinion. We just have to wait and see. 60-minute, unfortunately can't really see it, but I can see this relatively nice area that I pointed out on my write-up. So maybe could play that like a bigger fake break, reclaim some sort of structure that gets broken. But all we did, what's the top of that is 6. All we did was break out, set a double bottom, a very mini double bottom for this type of level to be confirmed. So not my favorite at all. I would probably not have traded this. I would have liked a longer, more drawn out double bottom. I think maybe a retest of the high of that, and then a takeoff from there, just because that's my setup usually. GM. Okay, weekly's coming back to 200 MA, that's very nice. Daily's coming back to the bottom of this range with 1, 2 consecutive candle extension, 3 if you count this missing candle, which I usually do. So it does have a lot of urgency to the long side because of these reasons. We got pinned exactly at the bottom of this range, so that is also very, very beautiful. 60-minute relative Yeah, I would say this is somewhat of a reverse head and shoulders pattern. I would have liked a bit more confirmation to be here, but still works. What was nice about it was that we had this level relatively nicely confirmed and respected, which gave a very nice incentive for us when we broke this 5-minute ghost candle formed range, the bottom of which was our level to be fake broken and taken around here, stop below the 1-minute candle, just an easy trade. This is a case of a stock where the larger time frame setup makes up for the shittier shorter time frame setup. The larger time frame was just so goddamn beautiful that even with this shitty of an intraday setup, it could have been taken. Of course not with a lot of risk. I would only risk 1 hour for this, because in my opinion this is just like a B plus setup. So yeah, I'm not sure where I was. I just had to pop out for a sec. MU3 consecutive candle extension back to an isolated pivot and a relatively nice support resistance level from before on the weekly. Daily tried to bounce, couldn't do it. Tried to break down from that bounce, but immediately recovered. So that's nice. Could be a candle prediction scenario, sorta. 60-minute came all the way from the top of the range to the bottom, which was quite nice. I'm not really a big fan of fake breaks on setups like these, so probably would not play it. But yeah, this would just be a skip for me. Can't really get a good read on it. Dell weekly, lower high, but now bouncing from 50 MA could be a candle prediction scenario. Daily's got an extremely clear level that got confirmed by yesterday's close, previous day close. Very nice. I would 100% play this level if the 60 confirmed that it was clean, which it was. Set up an ABCD on top of it, and I especially love when we set up ABCDs, we come back to test the level and then bounce from there. So that was clean as hell. Got a very large fake break of the level, easy entry right at the reclaim. Stop loss is a bit harder on these, maybe a bit room below the level. Could have used this if I wanted to be a bit safer, but right now I would probably use this, because we skip these bodies, or the stop loss would be below these bodies, and I would discount this fake break and just say that if we came back down here, set a new 1-minute low, then the setup probably would have failed anyway. Target is based off of 60-minute resistance levels, which is quite nice. ATR would have been $3.2, 80% of the ATR, which would have given me 114.6 as a target, which we did reach quite nicely. I think I just took these off because I was afraid that daily was quite choppy, 50 MA was in the way, and I don't really like to overstay my welcome on these stuff that's relatively okay, but mainly I'm playing it for the levels. Weekly was coming into moving averages as well. So yeah, I think that an earlier exit in this case is very understandable. MU. Yeah, I've already done that. Did I just go through Dell again? Or did I? Oh no, this is the day after the previous MU trade. Okay, so now we've confirmed the fake break. On these days I like to get some sort of 5-minute pattern before they open, which we fake break and get a few minutes momentum, which is what happened. 5-minute pattern is not super tight. I would have liked for it to just continue a bit longer, open here, and then get a fake break recovery or something like that, which didn't happen. Fake break wasn't that big. Probably would not have played this trade. Wasn't so clean. Netflix weekly coming back into the 9 after a fake break of the previous high, which was also a past high on the weekly. So not really looking good, but I'm guessing that the level here is what I wanted to play. And yep, but 60-minute, we can see that it's not really clear. I don't really like lower highs here. I like the fake break and recovery, but it's just not really supreme price action. We'll skip. Oxy coming down into this level, 3rd consecutive candle in a row, and we are now at initiation support. Or not initiation support, sorry, because that was this right here. but the range is low. We're coming down into that. We now have a confirmation candle, which is within the dead middle of the previous candle. I'm not really the biggest fan of these, but we do sometimes get nice levels like we did on the 60 right here at 51. We got down to it on multiple consecutive candles on the 5-minute. Maybe if this had been much further from the 9, I would have liked to play the range break, just like I pointed out here, but this way it just didn't really have that urgency to it. So that is a skip for me. Pfizer still chopping, still higher lows. Retesting, this range is high. Levels are just not exact enough. 60 minutes all over the place, easy skip. BA breaking down from this range. I especially love that we have an inside candle which is in the lower half of the candle that's preceding it. 60 minutes not super nice, don't really like these scattered levels. Also don't like this big wick against me right off the bat. Before the open, or oh no, this was a 9 AM candle, so don't really like that. Sort of like a fake break of these scattered levels, and it gets much more tough to get a nice solid entry and risk reward on trades like this. So a skip. Intraday didn't really pose anything to make up for the 60 minute either. CMG very nicely holding 50 MA, making higher lows, breaking out of this range-ish structure. I love this level at 56.50. It's a bit above that, but that's cool. We only have one resistance level, but usually on breaks like this, we just blow past singular wicks. And we opened right on the level, set up somewhat of a hammer, not the most beautiful, but very nice 1 minute ORB. Could have taken an entry around here, set my stop below the level, and just ran it for a few minutes momentum. ATR, 80% of the ATR was 1.2 bucks. Since we didn't really open very well, I'm not shooting for 100%, I'm just shooting for 80%, which would have been 57.3, which is where the mark is right here. I would have gotten an allowed entry right there. INTC, trying to make reverse ABCD, although not really, seemingly not a lot of pullback. So we pulled back, tried to break below previous lows, which we did, but immediately recovered. A bit more long biased on it, although I would be a lot more long biased on day 1 of the fake break, so right around here on this candle. But we do have a relatively nice level on the daily, I can tell immediately, so we broke out from that level very nicely. I'm guessing there was some news. 3 consecutive candles back into the level on the 60-minute chart. 5-minute chart made a nice curving pattern and is now getting extended back into the bottom again. I love that too. 15-minute also 3 consecutive candles, lots of lower wicks, very good for a long setup. We dumped into this level very far from the 9 on all smaller time frames, so that is a beauty. Very large dump, 20.03 to 27 or goddamn 1975 ish, so that's approximately 28 cents. ATR is 86 cents or $1 if you wanna be a bit more realistic. So that's approximately a quarter of the ATR in the first minute plus this extension. So that's very nice. Large bar I usually don't like to play after these, but I really like this lower wick and the fact that on the next minute we made a lower wick as well and reclaimed. This is a bit unorthodox, but a still good entry around here. Would set my stop below low of day. These do tend to just try to come back, get some more people out, and then work after that. Target on these plays that are very pre-market dependent is usually pre-market levels, which right now was open price, which aligned with a pre-market level, then this level, and then this one. So I think this was a nice trade. MU range all the way from top to bottom, not really the nicest confirmation. I would have liked it to be cleaner, a cleaner capitulation with some volume at least, because this was shit, or a nicer curve. Still far from the 9, of course. So I'm just gonna blow past that. 3-bar play on A firm. A break of that would be very nice. Daily does seem a bit extended. This would be the 4th consecutive candle, but we do have an inside candle. yesterday, which is still playable. We're above these highs right now, or we went above, but we couldn't really hold. Don't really like the fake break. 1 minute extension is probably what I've played it for, but the reason it's shit because we came down with a large bar, then pulled back 2 inside candles, back to 9, and we only have a 1 candle extension from the 9, and even though that is large, we do have an inside candle yet again. Reverse hanging man pattern, and I love the fake break here, so that was quite nice. For a short play, could have been taken, but not really my favorite. It did end up working, but probably would not take it again. Pfizer, weekly situation still the same. I like this ABCD-ish pattern. Don't really like how we are within this very scattered range. No solid structure to it. 60 minutes extended as well. Yeah, this is just a no-go. PayPal very nicely breaking and retesting this range. Would have liked a bit bigger break and maybe the pullback not to come back this much into the range. Not really my favorites, but now we're above the range high, or the peak outs high, because I would call this the range approximately. And then this just a peak out, but we're above the peak out high as well. Daily level is relatively nice. On setups like this where we have two approximate ranges, the break from one range into another and the retest of the bottom of the separating line tends to be a nice call for a second range one, which is exactly what happened here. A bit aggressive pullback, but very large separation from the 9 on the 5 and on the 1. I'm not really the biggest fan of this fake break here, but because of that, maybe could have been taken. I don't really like these two consecutive candles, but when we have a very large separation from the 9, even with two consecutive candles, and we get a fake break, not consecutive, sorry, two inside candles, and we get a fake break of those two inside candles, a reclaim, that tends to be a nice pattern. It's not specific to two inside candles, of course. This is just what happened in this scenario. So yeah, the reason I probably wouldn't hold it for long is because 60 minute just doesn't really seem ready for it after slam down candles like this, which is what happened. Price just is not the most likely to instantly reverse, even though the larger time frame is relatively okay. I would wait for further confirmation to be put in, and that's the only way I would play it, I think. I'm not even sure what happened. Yeah, so this was the day. We did end up running the range, but it was just a bit riskier. Oops, with this 60. I even would have gotten stumped out, as I said. It needed some more support. Run is very nicely ABCing off of the 9. What's not nice about it is that we broke out from that high and went back under it. Not really my favorite, but can see in the daily that this area will be super nice to play. 60 minute doesn't seem so nice. ABCD is relatively okay. I like how it's tightening. The fade break maybe could have been taken with a bit more substantial pullback and reclaim, or maybe just a slower curving one. Yeah, I probably wouldn't take it. It did end up working and it was nice, but it's just not really my setup. I don't like to take the pattern of these ghost candle patterns. Maybe if it had not been full of ghost candles, that would have been just a nicer stuff getting tighter, than the fake break would have been a very clear entry around here or on the reclaim of this high with a stop below this, probably ATR approximately $1.2, so 80% would be $1. 1920 is PDC, or sorry, 1935. Could have gotten for 2035. Still would have gotten like a 2.531 with a lower stop loss at the higher entry, but with a tighter one around here and an entry around here. The break of that would have given me a much cleaner risk to reward. Schwab sure it's worth talking about. Everything is super marginal. I think I'm just gonna skip that. TL, okay, 4 consecutive candle extensions into approximate initiation support, but we're not quite there yet. Daily trending down, not really extended. Wouldn't go for the longest because it's not extended enough. Wouldn't go for a short because for that it's a bit too extended. I like to be on the safer side of these. This is just an immediate skip for me. Target setting up somewhat of a reverse head and shoulders or high or low, whatever you want to call it. Then on the daily, we have unfortunately 3 consecutive candle extension into the break of this approximate level or area around here. 60-minute has the level outlined much more nicely. Unfortunately, 60-minute confirmation is not super solid. I keep having to just pause the video because I keep sneezing. I'm absolutely dying of a cold. Anyway, this 60-minute price action here is very scattered. Would have liked it to be a lot more cleaner with an ADC around here, and that way I could have maybe played it, but this was just way too risky and shit. We had resistance level above, which got fake broken. Another peak out here that we would have had to blame, and this thing that ended up being this peak out high intraday or sorry in pre-market. MO is pulling back into a past chop zone area, which is relatively okay. 1, 2. This would be the third consecutive candle. 6, 7, 8 doesn't really have a nice pattern. It does have a relatively okay range though. With a small fake break, we would probably not have played it, but with this big of a fake break, it was super nice. Could have played it here, stop below PDC if I wanted to be a bit safer in the middle of the engulfing pattern. I'm gonna play it back up to pre-market levels, as I usually do with pre-market patterns, back into the 20 EMA, and yep, I think that would have been a relatively nice trade. Snap somewhat of a double bottom at the bottom of this larger range. Daily is just too slow for any momentum though. I guess I like the fact that we pulled back into the top of the daily range with another tighter range. I don't really play these type of setups anymore whenever we have like a daily or 60 breakout retest and then a tighter range and then a pop above that, because it usually tends to have these resistance support levels ahead that we have to get through, and it's just very iffy to play. So I usually take a skip on these. And we have Uber reverse head and shoulders ish pattern at approximately the top end of a trend. Not the top end, but in the upper half of a trend. Not the best pattern to have at the end of a trend, but relatively okay. I would have liked these highs to be cleared before playing ideally, but still can be played below those. Daily also has a lot of these levels are too scattered for me to try and make sense of it. In these cases, it's usually the 60 that I rely on, and even that wasn't so nice. Yeah, it set up very slowly, and I overplayed it. These type of entries would have been better with a super clean level, a super clean 60-minute pattern or something, but with something that was not at all exact like here on Uber, this was just not the way to go. And as you can see, we did end up setting up very nicely slower on the break and retest of this very wide pennant. But yeah, this was just definitely not the way to play it. Maybe could have played it here, but it was just too marginal.